Asian markets, they are largely mixed. So we do have the Taiwanese index, which is down around 118 points.
Friday to Friday, markets, both small cap and mid cap indices, were down for the first time after 12 straight week of gains.
The opportunity has actually started to shift from being a good to have technology to a must have technology.
That this particular delisting will be via scheme of arrangement, which means there will be a share swap with ICICI Bank. So
first rates are in. The Nifty is up close to around 20 points.
We are seeing that the broader markets are doing very well and may continue to do so.
Price increases are not that frequent in this industry. We had taken this only in a partial portfolio.
A little more for Tata Consumer is largely because of a Citi note. They've initiated coverage. They have a buy recommendation with a target a little over 1,000 rupees.
As far as particular this year is concerned, we should be again able to avoid something close to 13 to 14,000 kilometers.
Markets are extremely range bound, very, very quiet. Monday
downgraded the rating on the stock. They've downgraded the rating to a reduce, and they've cut the target price quite steeply. You know, the target price has now come to 700 rupees.
Morgan Stanley observes that companies are now trying very hard to strike a balance between growth and profitability, and we've seen that in some of the numbers. We've seen that in the commentary as well.
The market's absolutely flat on the Nifty.
Well, that was the day so far. You're with us here on another new edition of Closing Bell. Last hour coming up here this Monday afternoon. I'm Prashant. With me, my colleague Reema, Surbi and Nigel joining in as well. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. Well, guys, pretty exciting day, isn't it? 2 points, 4 point, 5 point change. So it's just kind of nothing at all, at least on the Nifty. Actually, nothing very much in the broader market as well compared to what we are used to for the last many sessions. So last 2 days, of course, there were some pullbacks, but it's neither here nor there. So just a quick thing, the Nifty is trading just under its 20-day moving average. That's a level we've been talking about. 18,668 is that number. We're at 18,670. So, I mean, just above it, nothing. And by the way, on Friday, we closed about 2 or 3 points above the 20-day moving average. You need a decisive close below it for a change in trend. Bank Nifty is trading just above its 40-day exponential moving average, which is at 43,508. And we're at, what, 43,596. So again, watch this over the next 60 minutes or so. Market breadth is about 1:1 overall. And I think last I checked, global markets were more down than up. Not very much going on. It's largely quiet as we begin this new week. Reema.
But it's good to see the mid-caps bounce back, right? The mid-cap index is up close to about 0.6%. The small-cap index is higher by close to about 0.3%. The advanced decline ratio is healthy. We've got about 1,600 stocks in the green versus about 1,400 stocks in the red. So after last week's weakness in the broader markets, today there is stability which has emerged and a lot of buying interest. So while the frontline indices have been very ranged, it's the mid-cap index where stability has returned. And this is something that the investors would take comfort from. The sector which is outperforming is the pharmaceutical index. So the Nifty Pharma continues with its outperformance. The Nifty Pharma index is a gain of more than about 1%, 1.5% now, with names like Cipla, Loris Laboratories, Narayana Health, Dr. Path Labs. Across the board, you're seeing some pretty good gains. And the second theme which is playing out are the monsoon beneficiaries. So whether it's in the auto pack like tractors, two-wheelers, consumer names, or even agri names. So the auto index is also doing quite well. The Nifty Auto Index, look at that, 1.2% higher on the auto index, buying in the last 30 minutes. And there, again, it's names like Escorts, Hero MotoCorp, M&M, which gives you tractors. So that's the pocket where there is buying. Consumer side, Tata Consumer, HUL, UPL, again, a beneficiary of monsoon progressing and finally picking up. UPL is one of the smart gainers in the large cap space. So that's clearly one of the big themes this market has latched onto.
Oh, absolutely. I think this is what the green area for the market is. A lot of auto stocks are actually seeing buying. If I could just name some of them, not just the two-wheeler makers, but even something like an M&M up and about. You're seeing even an Eicher Motors, for that matter. Maruti is up about 2%. So auto is definitely a very, very strong pocket of the market. And FMCG, some of the names beyond the Nifty as well. The Nifty, of course, we are talking about Tata Consumer, and you'll hear more about that stock as we go on because of the Citi report. But even beyond, so Lever and ITC is not done as much, but Lever and Tata Consumer from the index are the key stocks that have performed well. Beyond the index, you have some names. Dabur, for instance, has done pretty okay. So that's something to watch out for. In terms of the mid-cap action, some names that stand out, PB Fintech. Today there's a very, very positive sounding Morgan Stanley note on internet companies, and PB Fintech is the stock that they're most bullish on. A couple of Indian brokerages have also struck an optimistic note on this one. So that's in focus. And some other names include the shipbuilders again. Look at Mazgaon Dock, and we'll tell you why these stocks are up. It's a continuation of that defense partnership between India and the US, and some further developments, which is why these stocks are excited. So we'll talk a lot about this. But yes, overall, mid-caps have held up after the wobble that we saw on Friday. The large-cap indices, well, it seems like on the Nifty and the Bank Nifty, Nigel, markets already looking forward to that midweek holiday.
Well, that's right. Surabhi, just one word. HCC, last couple of days, the volumes have been very, very high. I'm looking at a disclosure coming in on the exchanges now. Asia Opportunities, Mauritius, well, they were one of the large holders in there. They had close to around 7.6% odd. It appears, going by this disclosure, that most of what was there has been sold out. So there was a selling overhang out there, which actually has got cleared out. Even post the block, there was still some quantum that was there. But now I think it's pretty clear that big seller, which had close to around 7% stake in the company, that's almost totally cleared out. But the question is, for the final 60 minutes, how do you position yourself? Well, to help us out with just that, we have Mitesh Thakkar, who's back with us on the show. Hi, Mitesh. Good afternoon. Well, sideways trade as ever. This morning you said I don't want to trade the index too much, but you had given us stock calls. Well, from the last time we chatted earlier this morning till now, the index hasn't moved even more than 5 points. I mean, from then to now. How do you trade the index right now, and what about your individual stock picks?
I think, a couple of observations. One, we have been maintaining that the index will remain sluggish and choppy and sideways, but I think, not much of volatility purely because the volatility indicators are flattening out. So the choppiness will be mildly on intraday basis, but not giving you a directional movement. I think wait for an hourly closing below 18,650, 640. I think if that gets taken out, you might get a 100, 150 point kind of a decline. Otherwise, it will be a market very sluggish. And to be very honest, I've maintained a range of 200 points, which is about 18,650 to about 18,850. But even 18,650 to about 18,760 could be a range because there was a gap on Friday with the pivot level at 18,760. So it's not even a 100 point kind of a range, just about 0.5% on the Nifty. And that looks to be in force for the next couple of days. I think as you approach the expiry Thursday, then you might see some kind of directional movement kind of try to kick into the index. So avoid the index. I think that view remains unless until we see a break below 18,640, and then we can take some kind of a negative or a short position. On the stock side, I have one buy and one sell. A buy on Shriram Finance. I think that's a stock which did very well on that back of that news flow which happened a couple of days back, and then we saw 2-3 days of pullback. It's now picking up steam again. So buy here with the stop at 1640 for targets of 1755. And a conditional sell on State Bank of India. It needs to break the 200-day average and the pivot of 551. I think they are just around 1-2 points away from the So if it breaks 551, go short with the stop at 560, targets of 530.
Mitesh, thank you very much for that. Let's talk about Prime Minister Narendra Modi's high-level US visit. Big ticket deals have been announced in the defense space. Parikshit is here with all the highlights. Parikshit.
Well, yes, 5 major defense deals were signed during this visit. Notable among them is a GE-HAL deal for co-production of F414 aircraft, F414 engines, which will be used to power the Tejas Mark II aircraft. Of course, HAL will benefit from this deal and a lot of MSMEs as well. On the MQ-9B Sea Guardian drones, India will be procuring 31 such drones. Bharat Forge, which had signed an agreement with General Atomics in January this year for providing aerostructures for these drones, will also be a beneficiary when it comes to the supply chain of General Atomics drones in India. Now, the master ship repair agreements. The US Navy has signed a formal agreement with L&T on master ship repair. We're told by our sources in the industry that L&T has been repairing US ships for the last 1 year, and the first US Navy ship came to L&T for repairs in August 2022, and there are at least a few more projects for Navy ship repairs, US Navy ships repairs with L&T, and all of that is under the works right now. So this government-to-government dialogue on master ship repair has been on since 2021 and has now been formally signed during the Prime Minister's visit. The US Navy is also in the final stages of signing similar agreements with Mazgaon Dock and Goa Shipyard. The government is very keen that the US Navy should repair ships at shipyards of government PSUs as well. We believe that with L&T, Mazgaon Dock and Goa Shipyard, at least 2/3 of the vessels in the US Indo-Pacific fleet could be repaired at Indian shipyards. So let's see how these deals fructify in the days to come. But yes, these are the 4 to 5 major deals that were agreed upon during the Prime Minister's visit.
Pariksha, just one thing. Is this and some were pointing out, is this a significant departure from, I mean, is this the first time that, an agreement like this will happen, that US Navy warships will be repaired at Indian shipyards, or has this happened before as well and this is a continuation of that?
Well, there have been a number of agreements between India and US since 2014, which includes agreements on using each other's logistics, using each other's infrastructure. Now, this is in a way a furtherance of that, Prashant, but at the same time, in 2021, we had started talking about ship repairs here in Indian naval yards. L&T was the first private company which was having these discussions, but now it would be the first time when government PSUs like Mazgaon Dock and Goa Shipyard will be involved in these government-to-government deals.
All right, got that. Thanks very much, Parikshit. Very interesting developments, and the market continues to salute Mazgaon Dock. This has been really a gravity-defying stock, and those triggers are helping it stay afloat quite nicely even today. Deepak Shenoy is joining in. He's, of course, founder Capital Mind. Deepak, good afternoon. Great to have you on the show as always. So I'm guessing you've already guessed this question. What do you do when you see a stock going up after already a 300-400% increase? It's, there is fear of heights, but there's also fear of missing out. Now, which fear is the greater fear?
Actually, I think, Surbhi, we own the stock, so honestly...
then you have no fear whatsoever. Then you're in a great spot. But what about others, Deepak?
I haven't bought enough. Yeah. So.
Okay.
So I think the problem in such stocks is that it's always going to be the case that you almost look at a company and say, how come it is trading at this value? Even today, with the numbers that it has and the kind of opportunities being given, or kind of the numbers that we're talking about in the next few years, it will probably still be at a 10 to 15 times earnings in 3 years if everything else pans out at this price. So, or even at this price currently, also it's not a significantly high P. So I think given the growth path and given where we're going in terms of both international, perhaps, which is the news today, and domestic increase in domestic building of ships and defense-based, Navy-based equipment, I think there's a long path ahead from them. They're probably going to get re-rated into a much higher market cap regime in the next 2 or 3 years. But if you don't have that visibility, if you're afraid of heights, and there's always going to be some kind of a fall. Any of these stocks, Mazgaon Dock itself corrected, I think, more than 40% last year. So this is not like a linear up moving stock, or 30% I think last year. So you're going to see 30-40% falls in the middle. So I don't think this is for people who are who expect a smooth ride going ahead. But I definitely think this place, especially defense and also in the railways, there is a substantially greater market cap waiting for a lot of companies who will get greater market share in this space, and also perhaps some of the PSUs which are relatively low rated.
All right, Deepak, stay with us and let's focus on another stock, MCX. That's surging away in trade on the back of a successful mock trading session on Sunday. Vivek joins us to fill us in with more details on that front. Vivek?
Well, that's right. So, MCX continues to remain in focus, and, the key point of discussion continues to remain whether the company can go ahead and successfully transition to the new TCS Trading Transform, TCS Trading software from the earlier 63 Moon software that the company is currently using. So, in the latest update, like you mentioned, the mock session for the new trading platform was successful. MCX is now conducting another mock session today, which is going on now from 2 to 11:30 p.m. And just to give some context, this is the second time that actually there has been an extension of the company with the 63 Moons contract, which basically means that there has been quite a bit of a delay from the company then in order to go ahead and onboard the new TCS trading software. So 2nd Jan, the company went ahead and extended the contract with 63 Moons for another 6 months, and that was the second instance of such an extension that the company has done with 63 Moons. Now, when you're talking about Q4, what the management said as far as the conference call is concerned, they sounded quite confident of completing the transition to the new TCS software by the end of Q1 FY24, which is now nearing completion. And when you're talking about the software cost, what's actually happening is that every time the company is going ahead and renewing the contract with 63 Moons, it's at a much higher rate, thereby impacting the company's cost quite drastically. In fact, what ICICI Securities mentions is that if the software is implemented by the start of Q4 FY24, it can lend significant operating leverage to the company.
Okay, all right. Thanks a lot for that, Vivek. Deepak, what do you think of this one? MCX, it's buzzing of late. It's suddenly moved to the high point of the day as well. Your take on it?
I think, yeah, we don't own anything in it, but this software cost thing is quite interesting because, 63 Moons, which kind of incubated MCX itself, and now they're separate entities because of all sorts of things that happened. But I think the dependence on their software was perhaps one of the pain points for MCX in terms of growth, because the more they grew, the more they would end up paying 63 Moons. And it was a negotiated deal that had to be renewed every year, as we can see, sometimes 25, 30, sometimes 200% increase. So I think you should see once they have a new software vendor in place, things doing better for them. They are, I think, the leader in the commodity trading space. There should be a difference going forward. But I don't have an analysis of the financials just yet. But just looking at the numbers, it makes sense that just moving away from the old software vendor, it's going to be very negative for 63 Moon shareholders, though. But it's positive for MCX is what my first read is. I don't have any details, further details here.
Do stay on. Deepak, got more questions for you, but need to slip into a break. On the other side, we'll also invite our Alpha Manager for the day, Harish Krishnan of Kotak AMC. Welcome back. There are quite a few mid-caps which deserve mention. Pull up an Aditya Birla Capital. A big gain seen in that. Aditya Birla Fashion has also moved to the high point of the day. That's got a gain of close to about 1%. Jubilant Foodworks. Ashok Leyland is up nearly 2.5%. So add that to the auto names rally that we are seeing today. In the IT pack, you've got Persistent and Coforge, which have surged to the day's high, and there is buying which has emerged. But on the flip side, you've got Emphasis, which has sunk to the day's low, and Emphasis is down close to about 1.5%, and Apollo Tyres is weak in trade. At the analyst meet, the company did indicate that the export outlook is a bit subdued, particularly from EU, where the volumes may be on the flatter side. So that could be weighing on Apollo Tyres, and that's at the day's low. Deepak, but one of the stocks of the day is clearly ICICI Securities. It's come off from the day's high. It was up nearly 15%. Now it's up 10%. What have you made of the move to delist the company? And is there some dissatisfaction that the shareholders perhaps may not get cash? They will rather get ICICI Bank shares, or it really doesn't matter because you're getting a blue chip like ICICI Bank in lieu of your ICICI Securities shares?
Rima, I think the Regulation 37 specifically states, and I got to know of this very recently, was about whether if you have a listed company who has a listed subsidiary, and if they're looking to delist the subsidiary, the consideration can only be in shares. It cannot be in cash. So, and then approval of 2/3 of voting members of both companies needs to be obtained. So both ICICI Securities and ICICI Bank shareholders will have to vote. Then, on the remaining 20, because ICICI Bank owns 75%, the remaining 25% will have to go through the delisting framework. I don't know if there's going to be bidding and all that stuff, but it could be based on the whatever price is decided or discovered. I think they'll have to offer ICICI Bank shares at that price. Now, ICICI Bank is trading at 19+ times past 12-month earnings. ICICI Securities, even with this rise, is trading at about 17 times earnings. So I think it's a good deal for ICICI Bank shareholders, whether we own shares of ICICI Bank. So happy for that. But what it will also mean is ICICI Securities, which has been losing, it has gone down from the top position in terms of being the largest broker in India to being, I think, just about somewhere around the top 5. I think it's number 4 or number 5 right now. So maybe they have different plans in place. They've had a change in leadership about three years ago, and things have improved for the brokerage. But to a certain extent, they don't enjoy the flexibilities of a lot of other brokerages because they have to give all the CASA effective spread is earned by ICICI Bank, not by the broker themselves, which is a substantial amount of income. So given that, I think maybe there are other plans afoot. I think though that this is positive for the bank, for ICICI Securities shareholders, it will pretty much mean now betting on ICICI Bank. The question is, at what price do you get those shares?
Okay, well, the expectation seems to be that it'll be a fairly good delisting price or exit that ICICI Securities will offer its shareholders. Stocks up about 10%. Well, let's move to another stock that's been on the radar today, and this on the back of some brokerage notes. Vivek is here to tell us more about SBI Card. Vivek, which are the brokers you're tracking?
Well, that's right. So SBI Card is very, very interesting. What's actually happened is that there seems to be two differing points of view, even within the brokerage community, in terms of how exactly to analyze the business and whether the current trend is actually quite positive or quite negative. So, first, let's have a look at what BofA Securities has to say. The brokerage met the management recently, and this is what they're saying. Number one, the company underscored its focus on profitable growth. Company also believes that linking of credit cards to UPI is expected to act as a growth accelerator going forward. And along with that, they're seeing the ramp up in newer categories like utility bill payments and also normalization of travel spend, which they believe still hasn't come to the pre-COVID levels. All of this is going to go ahead and improve the outlook. Along with that, they're expecting retail spends to grow at almost 20 to 25% CAGR, going forward. So on the back of that, BofA Securities is quite positive. They're saying NIMs are expected to bottom out in the first quarter with stability in the second quarter and likely expansion of NIMs in the second half of the year. They also believe they remain positive on the company's ability to deliver industry leading growth both on cards as well as spends growth. And like we've been highlighting, throughout the day, Nomura in fact has downgraded the stock, a steep cut in the target price. What they're saying is, at this point of time, the profitability, remains under pressure. They believe the entire credit card industry outlook is deteriorating, and SBI Cards continues to lose market share. And they also believe that at this point of time, there isn't any valuation comfort, which has actually gone ahead and driven their downgrade.
Okay, well, differing views there coming in, but interesting as always. Takes all kinds of views to make the market, isn't it? Vivek, thank you very much. Deepak, thank you very much to you too for staying on and answering all those questions. Appreciate it as always here on CNBC-TV18. Well, Harish Krishnan is now joining us. He's Executive Vice President and Senior Equities Fund Manager at Kotak Asset Management Company. Harish, good to have you with us here. Thank you for your time. Just a quick word on just something we started talking about in the show, which is defense and specifically shipbuilders. Our colleague Parikshit was talking about how, as part of that the India-US joint statement after the Prime Minister's visit, shipbuilders perhaps get a boost because a large proportion of US Navy's fleet, what's in work is that they will get serviced, repaired, etc. At these shipbuilders. Now, that's a first, according to some experts that we've spoken with, and opens up a large opportunity set. You are someone who looks at numbers bottom up. Have you looked at, stocks like Mazgaon, etc., companies like Mazgaon, and what's the potential here? How much is being already priced in after the run-up?
So, without getting into stock specific, as always, Prashant, I think defense is an interesting space, primarily for the fact that there is a greater scope for indigenization, which is basically that there is a lot of imports that happens in defense, and if that can be value added in India, and that's really the broader narrative that we have as far as defense is concerned. Now, whether it being in the form of, say, shipyards, or it could be in the form of, say, even, for example, MRO facilities in the aviation sector, or it could be in the form of, say, explosives and ammunition, which otherwise were imported and now being value added. I think there is a whole range of opportunities that have opened up. Having said that, of course, this is driven entirely by the government. And generally, we've seen that, government based companies typically tend to have a lumpy kind of a revenue and an ordering profile. When times are good, I don't think one should extrapolate it beyond the recent time frame to believe that this will be the new trend. The case in point I would like to make is that defense as a percentage of GDP, and whether we look at India or across the world, has actually started coming off. So while it is a topical point of today, especially with what's happening in Europe and Russia, I think one shouldn't get carried away. There are various parts of the economy as well, which are, wherein spends are growing faster. And I would think that given that those would be more driven by consumers, possibly they would be a better or a far more predictable kind of in terms of valuations. So we have exposure to defense names, but I would say after the run up, we would like to temper down expectations.
All right. Hi, Harish. Harish, give us your view on the banking space itself. What's your take out here in terms of a pecking order? That was the consensus buy. We've gone to a phase of more or less some consolidation. How would you approach that space from here? Are you looking at some of those private sector banks that have underperformed? Do you believe the PSU banks still have value out there?
Right. So I think the consensus, and we share the longer term optimism on financials, which is clearly that our overall leverage is quite low, and therefore credit growth can pick up meaningfully in this decade. And a lot of cleanup has happened, which means that at least at the start of the cycle, things will be a lot more rosy when it comes to the profits pools that can come through. And before the credit cycle starts moving a bit adversely. So I think the key question is how much of this has already been priced in. I don't think we differ with the prognosis that it's all very good for the banking system. I guess the issue is more, like I said, in terms of how they've already run up, as well as in terms of the ownership in the space, wherein most of the fund houses, both domestic and international, have a meaningfully large position. Just another important point I would want to bring out is, if you look at profit as a percentage of GDP for the banking system, just for the banks, it's now running close to about 1% of GDP. And this is at its highest that we've seen in the last 20 odd years. They are at the end of the day cyclical names. Of course, I'm not saying that one can't go to 1.2 or 1.3, but one needs to be mindful that one is buying it close to the top of the cycle. The entire economy has to grow for much more stronger for the banking sector profits to continue to keep growing at 15, 20, 25% thereabouts. So those are the two observations that we have as far as the banking sector is concerned. NBFC, of course, given the fact that interest rates are likely to head lower, I think they are likely to be better off with a slight improvement in their NIMs. And assuming that the overall economy holds fort, I think NBFCs are in a better spot at this point of time, especially given the fact that over the last 2-3 years, they have kind of underperformed the banking space.
Sorry, Harish, just to clarify, you said banking profits are about 1% of GDP, and that's the top of the cycle.
That's right. Over the last 20 years, that's where it has been. So this is, of course, only the banks. I'm not including the non-banks.
Got it.
Got that.
Harish, hi, Surabhi here. Just wanted to get your thoughts on this whole new age part of the market, right? Morgan Stanley came out with a note and they sounded a fairly optimistic sort of note on just the profitability trends and the fact that almost all companies cutting across sectoral lines, now they're focusing a lot on this balance between growth and profitability. What is your stance? Have you been accumulating anything? Because, stocks fell off a cliff, but since then, several like Paytm, for instance, they've had a pretty decent run.
So I think we continue to be selective over here. Our stance is that these are great optionality instruments in the sense that obviously some of them can create tremendous value. And therefore, it makes sense to buy them as a basket rather than buying them and assuming only one or two and have a concentrated position. So we've got a basket of these new age companies in few of our portfolios, especially which have a technology bent mandates, in their offerings. I think, given the funding winter that we are seeing, there are broadly two costs that any new age company, has. One is in terms of employees and second is in terms of cost of acquiring a customer. And both of them are trended down quite meaningfully given the funding winter that's happening. And therefore, companies which will see through on the other side, I would think have a very large opportunity to create value for the shareholders. And so the only negative, if one may, is that there is a significant amount of supply by various private equity and various other investors on the venture capital side, which obviously keeps adding to the supply. But by and large, I think that it's at least about 3 or 5 of these new age companies can potentially create significant value over the course of the next 3-5 years.
Harish, talking about the supply that we've seen from large private equity players or even, VCs, there have been a slew of block deals. The latest one was in Landmark, but prior to that, it was in Sansera, Kim's, Shriram Finance, HDFC, AMC. A lot of the domestic mutual funds were buyers in, these block deals which took place. Were you interested? Did you buy any of, did you lap up a large chunk in any of the stocks? And if yes, without naming them, if you could give us an indication where you found the valuations attractive enough to buy.
So we've been selective. So we've participated in some of these deals. I think from a supply point of view, clearly, there are two kinds of supply, right? You've got the primary issuances of stroke IPOs, and then you've got the secondary sales by existing shareholders, especially on the private equity venture cap space that come off to offload some of these. I guess as far as the primary market is concerned, we haven't seen too many new issuances, and that's possibly a good sign because the cycle is just starting to warm up over the course of, possibly the next 6-9 months. We would see a lot more issuances coming there too. As far as the secondary supply is concerned, I think our primary interests are in spaces which are different from our existing portfolios. So if we already have a lot of financials, are we adding on to financials names? Possibly not. But if there is something which complements our existing portfolio and where we were finding it difficult to build reasonably large quantities given the liquidity, I think those are the areas that we've kind of added over these last 2 months, where there has been, as you rightly pointed out, significant amount of supply by existing investors.
Okay, Harish, thanks so much for stopping by and filling us in with your take on the markets as well as individual sectors. Wishing you a good evening, and we look forward to chatting up with you rather soon. By the way, when we're having that chat with Harish, the markets from being more or less flattish, well, it's up close to around 40 points odd. So the Nifty has finally made a bit of a move. A few stocks that have moved in the last few minutes. You have Tata Motors, the auto pack actually has moved up. So that's done pretty well. And the metals pack as well. Both of them have moved to the high point of the day. And the Nifty Bank from being down by 50 points, well, that's moved into the green. Slip into a short break. And as always, Nimesh will be waiting for us on the other side. He'll give us an insight into dealing room chatter. We'll also have Mitesh joining back to tell us what to buy or sell tomorrow for a reverse trade later on. Don't go anywhere. Welcome back to Closing Bell. Well, as promised, Nimesh is with us to tell us what he's picking up in terms of D-Street chatter. Well, Nimesh, it's more or less a quietish day. Maybe everyone's looking forward to the truncated week, but the holiday that we have in 2 days. But what are you picking up in terms of flows?
So Nigel, and as you rightly pointed out, very quiet in terms of activity as well. Even in terms of flows, I understand it's very, very stock specific and largely in the large cap names from the institutions. Having said that, the broader markets are relatively outperforming. So the momentum continues in that space. The Nifty mid-cap is up over 0.5%. And even in terms of volumes, there is a larger participation in the broader market. So that stands out. In terms of sector, that stands out is pharma. Again, for many days now, that is one space which has largely been well bid by larger institutions. And there is a general interest as well in terms of buying into pharma names. So the pharma as a sector stands out, but broadly, very quiet day of trade. And even the volumes are quite low from larger institutions.
All right, Nimesh, let's get to the juicy part. You know, I think bull markets are a good time, right? Because there's so much of news, so many blocks that are happening.
Absolutely.
But tell us the few that you've picked up for us.
Sure. So the first stock on my list today is AB Capital. The stock has been consolidating in a very narrow range for the last many days now. And the feedback is maybe the company is likely to raise funds via QIP very soon. It can get launched in the next day or two. So that's something to track in AB Capital. The second stock is Minda. Again, the theme of block deals continue. The stock has been buzzing off late, up 5% this month. But I expect a large block deal in Minda and Minda very soon. So that's something to track in that stock. So that's the second one. The third stock is Tata Motors. This is one stock which is well bid by large institutions for the last many days. So the volumes are quite high even in today's trade. And there is genuine buying interest from larger FIs into Tata Motors. And the last stock is Aavas Finance. In the last one and a half hours, there's been a bit of a surge in that stock, up 4% last when I checked. I guess there was a clean out trade from a domestic insurance company in Aavas Financials. Remember, this stock has been under pressure for a very long time. For the last couple of weeks, Capital International was a big seller. It got reported in the block deal as well. Now I believe even the domestic insurance company has cleaned out. So that's the reason why a big surge in late trade in Aavas Financials.
Okay, thank you very much for that. 5% gain on that. Aditya Birla Capital, where there is a possibility of a QIP, that's up close to about 3%. And Tata Motors too is seeing a lot of buying interest. Mitesh is back with us for a few BTST calls. Mitesh?
So I have a buy or BTST on Info Edge rather than Naukri. BTST here with a stop at about 43.70 for targets of 44.50. And the other one which I like is Rain in Industries. That's a buy with a stop at about 167 for targets of 176.
Okay, all right. Thanks very much, Mitesh, for that. We'll come back to you towards close. There's 18 minutes to go for market closing. You know, the market, when we started at 2:30, market breadth was 1:1, almost 1:1. And there is a significant gap now between gainers and losers in favor of gainers. 1,300 stocks are higher and just under 1,000 stocks are lower. So as you can see, the green line has moved up a little bit. The red line, the declining line that has moved down a bit. Look at Landmark, and we were talking about this earlier in the day. We were discussing this with our guest in the morning. There were, all these blocks which had happened, and some large investors had come in. And I was saying how it was a little surprising. A stock made a high of 755, and look at where it is now, 690 rupees from the day's high, complete round trip. That was the day's highest point, by the way, at 755, and from there on, it's non-stop come down to the day's lowest point where we are at this point in time. Anand Tandon is with us. Anand, good to have you with us here. By the way, do you track this one? They are dealerships for premium cars. Landmark, a recent IPO. Any thoughts at all?
Not really. I wait for a while before the market settles down in terms of new companies that are listed. And I don't think enough time has elapsed for me to take a view on this actually.
Anand, how are you feeling about the market itself? Last couple of days, there was a bit of small pullbacks, mid-caps and small caps specifically.
Well, that's right. I mean, it's not that the market is very cheap anymore, but at the same time, I don't think there is any near-term issue that one can spot. There was this concern about the monsoon, etc. Monsoon now seems to have arrived for most parts of the country. I have been mentioning that, despite whether it comes or not, or is fully well distributed, you will still see enough of money coming into the rural hands in the current year. So for me, it was less of an issue, but perhaps that was something that was cooking the market. overall, I think the market trend continues to remain, at least in the near term, on the upside. And as I said, you have to get a little more careful as the market rises, obviously, because most of the themes that are currently playing out are fairly expensive now. So you have to start looking at a longer term and perhaps some contra themes. But otherwise, you need to stay on and ride the curve.
Anand, afternoon. So where is it that you are seeing value? I remember our last conversation, and I think you had spoken about cotton prices and how innerwear companies is something that was looking attractive to you. You were also looking at smaller hospital companies. Can you talk about some more spaces where there is value right now and there is growth visibility?
So not so much value, but perhaps valuation, which is not that, where the growth is more definite is essentially what you are looking for right now. So, valuations which are not at peak levels and perhaps some upside there in terms of valuation and therefore also the growth. And as you mentioned, hospitals, pharmaceuticals are two areas. I have been mentioning that, the margins for generics in the US have now bottomed out, and from here on you should start seeing some growth coming through there. Most of the companies have actually started focusing, especially the ones that are in the generic space, have started to focus on more complex molecules, and that is beginning to come through, whether it is Reddy's or Aurobindo. So some of those themes are also beginning to play out now, and that's been a sector that has underperformed. To my mind, energy remains something which is fairly attractive, though most of the brokerages have a sell on. In my view, you will see an uptick. So you cannot have a situation where you argue that you will have, a growth in the economy overall and not have increase in energy prices and energy consumption, because we have both in terms of power and in refining, especially power, for example. I would expect to see price rises there as well. So some of the energy companies, especially the distribution ones in terms of, generation ones in terms of power generation, I think look reasonably attractive to me. So there are spots to pick, but overall it's a little difficult to find themes that are underpriced at this stage.
Okay, so that's a word on some of the power-related stocks. The market's absolutely flat up, nothing moving whatsoever, 22 points up. And that's all that we have got today. Varun Beverages, by the way, has started climbing 4% up on the stock. That's the Nifty for you. Such a tight trading range today, just around that 18,700 mark, and no headway whatsoever. Anand, FMCG has been a bit of a green spot today in the market, maybe just sentiment rub-off with the monsoon setting in. Would you look at any of the staples stock, and if yes, which one would be your top pick?
Well, I wouldn't like to make recommendations per se, but more than the staples, to my mind, it is those which are chemical based which are more interesting, because the commodity prices have come down. So, some of the companies like Tata Consumer or Godrej Consumer perhaps may have more upside than perhaps the staples. Staples, for the time being at least, I think you will find that, the prices of commodities are not going to fall so much, because the government is likely to come up and find support prices which are a little higher. And also these companies continue to remain trading at very high valuations relative to the kind of growth that they can deliver. So on the consumer side, my preference would be on those which are in personal care and things like that.
Anand, do stay on. Need to slip into a very short break. When we come back, we'll also be closer to markets coming to an end. For now, it's pretty flat on the Nifty and the Sensex. The Sensex has just dipped into the red, while the Midcap index continues to go strong, now up 1%.
Welcome back. You're tuned in to Closing Bell. Well, Shree Cement, we have reached out to them for a comment, and there have been various numbers that have been doing the rounds since last night. Well, they are saying that the income tax survey is still ongoing. They would like to dismiss any tax evasion related details so far because of the big numbers that have been put out. They're saying that the survey is yet to be concluded to verify any kind of impact. And as they've been saying, they're cooperating with the department as well as providing all required information. So for the time being, that big number that was doing the rounds, they seem to have dismissed that, but we'll have to wait for further clarification from the IT department itself. But Anand, what do you make of Shree Cement? The top run company, highest pedigree, suddenly you have this tax evasion details that are coming out. The problem for them is valuation-wise, they're not cheap. What do you do with the stock from here on?
So I would ignore the tax evasion thing. At this stage, it is too early to make a call on whether or not any tax has been evaded, and I would expect not, but we'll have to wait and watch on that. But so that's not really a decision maker as far as the company is concerned. You have to really look at what you are buying in terms of the valuation. And as you mentioned, that makes the stock reasonably unattractive in terms of the upside that you can expect even without any of the other distractions that you have. So from that perspective, I would hesitate to say that you may want to hold on to this. I'm sure there are better, smaller stocks which are available. One of the themes that was in cement earlier was that smaller companies will get aggregated. That to some extent after Adani has pulled back from its expansion spree has gone off the table. So from here on, you're actually looking to see those companies which will be able to deliver organic growth in terms of their own performance. And right now, cement, I think, is going to struggle to do that.
No, I completely agree. And if you sort of look at a long history of these kind of cases and, from the time of the first time that the allegation of evasion itself comes through the investigation, it may take a lot of time, but if you see the end result, at least going by history, you won't worry too much. As an investor, you wouldn't panic. Stocks, by the way, already come off quite a bit. We are from being down 10%. Shree Cement has recovered 5% and is doing quite okay, at least from the morning lows. 27 points on the Nifty is what we have. There's 5 minutes to go for close. Anand, any specific names you want to highlight? Anything you're buying or you've bought recently?
Well, right now, I think it is more interesting to look at global markets. I think, a country like Japan, for example, to me looks quite attractive compared to where we are. That trade is something like 11, 12 times earnings. We are closer to 20. So if you are really looking for finding value, I would argue that, with the kind of inflation that we are beginning to see in those countries, you may find better value there.
All right, Anand, I'm not sure whether you track this one, but Varroc Engineering, I spoke to them at their plant as being one of the big underperformers. However, the management is now saying that the best is yet to come. They're guiding for double-digit growth, more than double-digit growth, and margins moving towards double digits as well. Any view on the stock at less than 10 times EV on EBITDA?
Well, that's right, but see, they had earlier not highlighted any negative when the performance suffered. So that's a bit of a challenge that one has to look at. But by and large, when you are buying a stock which is not trading very expensive, you have some upside potential simply because businesses do tend to be in cycles, and as the cycle turns to be on the positive side, there is a possibility of surprise. So at this stage, I would think that that is certainly one of the companies that one could be considering.
Okay. Could be one of the companies that one should consider. All right. Well, Anand, thanks so much for stopping by and helping us out with analysis on various stocks. Wishing you a good evening as well. Well, time to wind down then. Just a few minutes to go before we wind down the market. So let's focus first on some of those large cap names. The Nifty managed to end in the green. We go home with gains of closer around 30 points. Cipla was the biggest gain, up closer around 3.5%. As Nimesh told us in D-Street Chatter, some of these pharma names continue to be bid very, very well. You have Adani Enterprises as well that started off in the red but did a U-turn. That as well was up closer around 3%. And Hero MotoCorp was up closer around 2%. On the flip side, though, you had a couple of stocks that are losing out. Reliance Industries was a little bit lower. TCS as well as L&T. If not for them, actually, the Nifty could have been much higher. But we go home with closer around 35 points. But back to you all in the studio. Plenty of action from the broader markets. Midcap index goes on with a gain of 1%.
Yes, not bad at all, actually. By the end of it, it was quite revved up, one would have to say. So I'm looking at some of the high flyers. You've got HCC, which is back on the volume and price action charts with a 7% up move. SJVN from the PSU space has had a good run today, 6% up. Gland Pharma is seeing continuous accumulation, up 5% today, 10.5% for this month. HBL Power Systems has been a blowout stock in the month of June with a lot of focus on railway safety, security and signaling. The stock is up about 4.5%. Good day for Varun Beverages, 4% up there as well. Equities, SFB. It's a long list actually of winners, so it's a very good-looking mid-cap screen suddenly. ICICI Securities was, of course, the newsmaker of the day with an 11% gain as the market is expecting a healthy delisting price. And, of course, there's no stopping the defense stocks, whether it's Mazgaon Dock, 7%, or something like Zen Technologies, with all eyes, of course, on the new IPO from this space, Idea Forge, which is going to be opening up, which is open for subscription, and we'll be having a listing very soon.
And it's already fully subscribed on day one. I think at 2 p.m. it was done about 1.7 times. And tomorrow you've got Cyient DLM. This is an electronic manufacturing services company, EMS space, which is very hot. And that opens up for subscription tomorrow. And that one too caters largely to the defense space. There are three notable losers in today's trade. One of them is Shree Cement. Ends with a cut of about 5%, though it did recover nearly 5% from the day's low. Landmark, quite a slide in the stock in the last 1 hour of trade. The stock ends with a cut of about 3%, but in the morning, the stock was higher by nearly 5%. Apollo Tyres weak as the management indicated that the export outlook is subdued, and SBI Cards, add that to that list of losers, that was down 1.5% on the back of a Nomura downgrade. A couple of other gainers in the pharma pack. You've got Alembic Pharma, which stands out. Very large volumes. The stock gains close to about 5%. Metropolis is higher. Loris Laboratories, Aurobindo Pharma. You've got AB Capital and Aditya Birla Fashion doing well in trade. In the IT pack, Coforge, Intellect Design Arena higher, but Emphasis struggles a bit. But all in all, flat on the benchmark indices, Prashant. But the Nifty, through the course of the day, respected the upper end and the lower end of the trading range that we've had, that we hit in the first hour of trade, both on the upside and on the downside.
Yeah, and sort of, held above the 20-day moving average as well. Although I'm not sure whether, I think we'll have to come back and give it a day, 2 days more to see if it really is, 20 days defended and all is clear, or maybe, there is more to go here. The indices not very much, broader markets much better, advanced decline improved. So that's the kind of day we had. Nothing to complain about actually after Thursday and Friday, where the markets actually dipped quite sharply. Not something which one is used to. Well, what we'll do is we'll take a quick commercial break here. And we'll come back on the other side. We'll put the spotlight on India Forge and the initial public offering, which, as we were just discussing, has been fully subscribed on day one. Lots of interest there. More coming up on the other side.
Next break I can do, right? Now there's one more break for I don't have to run up and down the stairs.
Yeah. Yeah. Well, it was neither here nor there for the benchmark indices, the Nifty. There was a bit of a movement in the first 1.5 hours of trade, and after that, nothing at all.